Hi everyone, at the start of new month, we are here with a market outlook for the month. So in the month of April, we saw the resilience of Indian markets where we saw indexes going up between 1.5 to around 3.5–4%. And if you look at index-wise performance, Nifty 50 large cap, we saw upside around 3.5%, mid cap was around 3.9%, small cap was around 1.7%, and the micro caps, which come after the top 500 listed stocks in the index, is around 1.3%. So all the small, mid, large as well as micro cap went up in the month. That was good. Now from a 1 year perspective also, the returns are looking positive, at least on the large caps and the mid caps. Large caps is like Nifty 50 is around 9% from a 1 year perspective, and mid cap is around also 5.7%. Small caps are still showing negative returns for the past 1 year. Whereas if you look at the global markets, yes, US markets gave around 1.5%, and from a 1 year perspective, they're around 12%, 12.2% up. The China corrected by around 2% in the month. Gold further went up by around 6%, 6.3% in the month, and silver corrected slightly by around 1.4%. So that was the performance of Indian equity as well as US and the gold and silver. And now if you look at what are the market trends, what's happening is that April was marked with a lot of volatility and uncertainty in the global markets, and because of the ongoing trends around the trade tensions as well as the tariff announcements which happened starting with the Liberation Day, the US Liberation Day, and because of which there's a lot of changes in the investor sentiments, and unpredictability also brings along difficulty for the investors to make their plans as well as businesses to plan their investments going forward. But despite these global challenges, Indian markets showed a lot of resilience, where we saw upside in the market. We saw a month where both the domestic institutional investors as well as the foreign institutional investors were net buyers in Indian markets. So that was a great move forward. We have been seeing buying by the foreign institutional investors for the last few days now. So that's a good positive and should lift our markets up. At the same time, from a global perspective, we saw correction in the China market, and that's primarily because they're struggling with the weight of the tariffs which have been announced by US, really steep ones. And let's see how they shape up with the ongoing talks between the countries. Now, from the fixed income overview perspective, we saw the US Treasury yields fluctuating and settling around 4.18% last month, and we also saw inflation coming down to the lowest level since September last year to around 2.4%. From India also, we saw rate cuts by central bank RBI, and we also saw liquidity infusion by the central bank. Around close to 1.25 lakh crore of liquidity has been pumped into the banking system, which should support the Indian debt markets, and also we expect with more accommodative stand by our central bank, we may see a trend of declining interest rates. Now we talk about the valuation of Indian equities. We still believe Indian equities are slightly overvalued by around 10%. The Nifty 500 P ratio is around 24.09. The large caps looks fairly valued, and while mid, small, and micro caps are still overvalued if you compare with the long-term P ratios and valuations. Now, if we talk about the outlook for the month of May, which is this month, the Indian equities are currently overvalued, and but the market directions or the market performance will be influenced by the corporate earnings which will be released this month. We also see that the weakening of the US dollar should drive more of capital flows into emerging markets, and India should also benefit from that. The other point is the geopolitical developments. I mean, that's also been influencing our markets for some time, and also the trade policy decisions which come up. The regional relationships with the ongoing tensions of our country with our neighbors, and could also cause higher volatility. But are also we are hopeful with the bilateral trade agreements happening between India and US should benefit as and when some clarity comes in the markets. From a buying perspective into equity, we think that investors' allocations of equity, if it's lower than the strategic asset allocation, then buying can be done. The large cap equities should be preferred because of the better valuations, and also then if from investors equity allocation, if the policy is aligned, then we can look at further corrections or dips to buy more. From a global equity perspective, US markets remain overvalued. But from a diversification perspective, US market still looks good, and especially the innovation-driven tech sector, which should keep seeing higher upsides and earnings in the long term. China represents another attractive markets to invest in. The valuations are fairly low, and there's a lot of support from the government in terms of stimulus. The Germany is looking quite interesting, and because again recent government stimulus around 500 billion euro, which should boost the infrastructure as well as the developments in markets there. Gold and silver, from a commodity perspective, we are bullish on. Gold continues to see upside, and because of the ongoing global tensions and a lot of strategic buying by the central banks, and even we are seeing a lot of buying in the global ETFs also, that should support the gold upside. Gold becoming another asset class in itself with a good upside trends, right? With diversion of funds towards gold. And from silver also, silver where there's a demand supply gap going on, we see upside on silver, and ideally a silver and gold index funds can be considered for investments. Now from overall investor guidance perspective, while we may see volatility and corrections in the short and medium term because of ongoing trade concerns, geopolitical tensions, etc. But from a long-term perspective, we stay bullish, and we recommend investors to stay invested and invest from a horizon of 5 to 7 years at least in the equities. I hope you found this video interesting, and look forward to meet you and do a reviews of the portfolio soon. Thank you so much.